Good morning, everyone. Happy Monday and happy Thanksgiving week. I hope you guys can hear me okay and you can see the screen. Just changing the camera angle a bit. Thank you for the confirmation of the audio and visual. We much appreciate that. It's also very important. So here we go. All right. Cool. I think we can get started. So, good morning, everybody. Happy Monday. It's 24th of November, so it's Thanksgiving week for U.S. markets, certainly. And I guess, it's one of those situations where there's a certain pattern that tends to take place during Thanksgiving week, and it's I think worth respecting or being at least aware of that it exists. But just like seasonality stuff, it first of all, seasonality tends to be a bull market phenomena, as are many other of these kinds of things where you say, oh, Thanksgiving week markets tend to be okay. And that's true, right? As long as we're in a bull market. But news, of course, can come out of left field. So what we're going to do for the next 10 minutes or so is go through some of the most important things on my notepad. If you're here for the first time, please give us a thumbs up, and please subscribe to the channel. That allows you to be updated in real time when we go live with our analysis. So we have, for U.S. markets, a 3.5 day trading week. So today, Monday, tomorrow, Tuesday, Wednesday, Thursday, U.S. markets are closed. Friday, half trading day. So most people are going to start scaling out at some point late Tuesday. At the latest, at some point around noon on Wednesday, Wall Street will be empty. And you'll be trading with yourself by the time Wednesday afternoon comes around, or with some machines. What I'd like to start with is the VIX. We break it down into sort of three areas. So I thought I would point this out here because I think, every time the VIX gets back above 20, 25, it's worth kind of reminding people. So generally, like the way I look at it is if the VIX is below 15, it tends to be kind of equity positive, right? It just means that, people are not buying a lot of protection, and so markets should, all else being equal, kind of go higher equities. And then you have the sort of the 15 to 25 area in the VIX, which or 15 to low 20s. It's not an exact science, I don't think, where markets should go higher, but can become choppy really quickly. And then you have sort of the 25 and above area in the VIX, where things tend to be a bit dicier, and we closed last week with the VIX around 22.5 or so. I'm assuming we're going to be a bit lower this morning. I haven't checked exactly where we are, but just keep in mind we're right on that cusp of potentially breaking above 25, which would make things further wobbly in the markets, in equity markets. So that's the first thing. The second thing I want to remind everybody is positioning, or at least sentiment. And I've been saying it now for several weeks. I think the number one pain trade that I see out there right now for the rest of the year is if we were to see an equity rally not come to fruition. And so I thought I would show you this by reminding everyone where we are in terms of the quarter to date. So I'm going to show you this with quarter to date performance. So you can see that, for example, quarter to date, so since the beginning of the fourth quarter, which was the 1st of October, the NASDAQ 100 is now down 1.7%. The S&P 500 is, I have to add it here SPY. The S&P 500 is now, for the quarter, down 1%. The Russell 2000 for the quarter is down 2.6%. Bitcoin is down 25%, and some of the other things are down much more as well. So the pain trade, I think, is full on right now. And as I mentioned, I think last week, if we don't start to see the bulls step in here real soon, like this week is a bit maybe less important because it's Thanksgiving week with less volume, but next week, then I think we have the potential of people just basically liquidating some stuff, saying, you know what, I want to save my year, not hope for a year-end rally. That's a possibility. So I just want to, again, highlight that I think the biggest pain trade here is if we were to see no year-end rally or fourth quarter rally, right? Again, that's, if you guys, you might recall, I remember late this September coming into October, I made a big deal about that to all of our clients and even here on Set the Market. And I said I've never seen that many people bullish for the fourth quarter. And lo and behold, we're now almost 2 months into the fourth quarter with 1 month left to go for the most part. And the S&P's down 1%. Okay. So if this continues another week or two, I think there's real potential of this kind of just fading out. But we do have Thanksgiving week, right? And so that's important. Now, you will notice that we have this sort of deal that they're trying to work out in the Russia-Ukraine war, and it's probably not random that they're looking to shoot for a date to resolve something by Thursday. So there is that potential catalyst out there that if, and I have absolutely no clue whether something happens, something good comes out of that. I'm just telling you from a market's perspective, that is what could lift markets this week. That is a perceived thing that the machines, the algorithms probably wouldn't mind to see and to further lift the markets. Whether that holds true next week, we don't know. But just for this week, I thought I'd point that out. Next thing I want to do is go through a couple of charts that are on the broader indices, and then we'll look at a couple individual stocks. So just purely technically speaking, last Thursday's candle was very important. That's this big red one here. So in my view, the longer we don't make up at least half or 3/4 of last Thursday's candle, the longer it takes for us to do that, the bigger the odds are that ultimately we break down a bit somewhat further, whatever that means, right? We'll have to measure and map that. So just keep that in mind. I think the longer we don't make up last Thursday's rally, sell-off, the higher the odds are of the market moving lower. And that would also basically lead then to maybe the people basically giving up hopes for a year-end rally, right? So can you guys all see how this kind of syncs together? Give me a quick yes in the chat box if you kind of see how we're mapping and measuring this whole thing. And if this is helpful, please give us a yes and a thumbs up. It'd be great to know if this is helpful for you. So what I'm trying to show you is how you can take sort of, a couple of different things you look at, and it kind of all comes together around the same timeline, right? So that's that. Now, before we continue, it is Black Friday week this week, and we have some crazy good deals. So if you're looking for a deal for some of our research, trade alerts, software, please look out for some amazing deals. It's always the best deals of the year. So if you like to save some money, look out for some deals. Our session this week, we call it our educational series, is going to take place on Tuesday at 11 o'clock Eastern. So that's 8 a.m. Pacific. That's this session here. And what we're going to talk about, just before we continue here, what we're going to talk about is sector and group rotation. Does everyone know what sector and group rotation is? It's honestly, I can honestly say this without a doubt, is by far my favorite strategy. I like to do it with ETFs. It can be done with stocks. It can be done with options. It can be done with futures. And I've always, over the course of my career, had the best performance using a sector and group rotation strategy. And even year to date, we're now up here. I can show you guys. We're actually up 225% on just ETFs. Like if I would have done this with options, it would be up, I don't know, 3-4 times that. I don't know, exactly something like that. So I believe that sector and group rotation is by far the most repeatable strategy when it comes to managing, whether it's a trading account or an investment account, because what we're essentially doing is we're following where the money is going, whether that is institutional investors or algorithms or whoever you want to define as being that leading machine. And so sector and group rotation is what we're going to talk about this week. And again, keep in mind, it is Black Friday week. So if you guys want to save some money on our tools, our research tools, our indicators, our products, this is the week to do it. Again, we would just encourage you to look out for emails and other things we're offering so that you trying to save you some money. That's the whole point. Okay. So don't be shy. So yes. And thank you, Christian, by the way. I should mention Christian just posted that link that you can register for this week's educational series for in the chat box here on YouTube. All right, so that's this. All right, let's move on. So that's the S&P 500. The NASDAQ 100 looks more or less the same. I probably don't have to show you that chart. It looks more or less the same on that. Now, some individual stocks I'd like to point out, and I'm going to show you these on the weekly chart. I believe I showed them the week before last. And here is Oracle on the left and Microsoft on the right. Now these are weekly charts. So again, what that basically means is that each one of these bars here is 1 week's worth of price action. And I just want to point this out, and I know some of you guys that are over in the Trade Ops members area, you agree with me on this. I don't think this is unimportant price action that we're seeing here in these stocks. The fact that Oracle here on the left-hand side had that big up move in early September. You guys remember I was a little critical of it. I thought, you know what, that doesn't make a whole lot of sense. Well, since that move, Oracle is now down 41%, 4-1. You know, Microsoft also had some, fabulous post-earnings rally or attempt of an earnings rally, which faded very quickly. That stock is now down 15%. Again, these are weekly charts. I personally wouldn't be surprised if this is the top of the market, but I really don't want to say that yet because the trends remain bullish. So on our trend following work, so for those of you guys that use the Market Rover, which again, we have great deals on all of our software and indicators and alerts this week. So just want to save you some money. If you look at, for example, Microsoft, and you pull it up from a trend following perspective, you'll notice it's still bullish trend, right? But it's certainly it's threatening to go neutral trend, which it hasn't been since basically early summer. So that would really be a shift. We took a whole lot on our active watch list. We took a whole bunch of stocks off the active watch list. In fact, last week we took off Spotify, again, some of the big names, Uber, BA, Microsoft, right? And a couple other things because they were changing the trend. So I think we're at a cusp here of where things could start to turn. But again, we need the trend change first verified before we make that call. Last but not least, I do want to remind everybody of the leading nature of what Bitcoin has been doing. So this is the chart that, again, I showed this chart to you guys the week before last. I've showed it to our clients almost on a daily basis for, I don't know, probably 2 months now. And I talked about how Bitcoin ultimately basically topped in October. So no, it has been like a month or so. Topped in October and then went straight down, and the NASDAQ 100 basically peaked 3 weeks later in late October and is now getting a bit more wobbly. So again, I don't know exactly whether we see the NASDAQ, the blue line, actually follow lower. but I think there's a decent chance that it does. So I would be, I'd be mindful of that. So with that, thank you everybody for being here. Have a good start to the week. Again, against the long and short of it is that the pain trade here would be if we do not see a fourth quarter rally again. So far, that sentiment read that I made about 2 months ago at the beginning of October, that the pain trade would be no rally in the fourth quarter. So far, that's true, right? That wasn't a forecast. It was just my observation that everyone was bullish, and now lo and behold, the stock market's actually down for the fourth quarter so far. That can change, but that's why we follow momentum. And so I guess the very last thing I want to quickly show you is momentum. So if you look at whether you look at the S&P 500 or the NASDAQ 100, we actually now have a bearish momentum signal for the first time since February. That's true both for the S&P 500 and for the NASDAQ. That's not to be mistaken with trend, right? The trends remain bullish, the longer term things, multi-quarter stuff, but the multi-week plus stuff is now turning bearish. And so we want to keep that in mind. So thanks everybody. We'll see those of you guys that are Trade Ops members in about 10 minutes. Also, we're having a special member session in about 40 minutes for members of the Trender indicator. That's our momentum indicator. That's the one you're looking at here in the chart. So we're going to spend probably a good 35 minutes this morning at 10 o'clock Eastern, that's 7 o'clock Pacific time, going through how to use the Trender momentum indicator. So be there if you own the Trender. If you missed the sale, we had a crazy sale last week of 50% off. I am sure that if you want to get it and you didn't get it on Sunday, you could probably still call Joel today, and I mean this morning, and he might give you a deal. But I know we're not going to extend that much beyond this morning because the real Black Friday deals start today. So again, if you want to save some money, you know where to go. Go to our website, check the emails, and see you guys soon. Thanks so much. Take care. And we'll see you back here tomorrow morning. Set the market.